Based on the provided data for Bitcoin, a short-term investment strategy appears to be the most suitable approach. The recent price history demonstrates volatility, with fluctuations both upwards and downwards. However, the one-week price forecast suggests a slight upward trend, with prices predicted to hover around the $95,000 mark. This indicates a potential for short-term gains. Therefore, the investment strategy entails a long position on Bitcoin. The entry price should be around $94,500, capitalizing on the current price point close to the support level. The stop loss should be set at $92,556.03, the identified support price, to minimize potential losses. The target price is set at $95,600, aligning with the predicted price movement and allowing for a reasonable profit margin within a short time frame. This strategy aims to capitalize on the expected upward momentum in the coming week, while mitigating risk through a well-defined stop loss. Based on the provided Bitcoin Cash price data, a short-term investment strategy appears promising. The 2-week price history demonstrates a fluctuating pattern with an overall upward trend. While the forecast suggests a slight dip in the coming week, the price remains close to its support level, indicating potential for a rebound. Therefore, a long position is recommended for a short-term investment horizon. A suitable entry price would be around $443, aligning with the recent price action and the forecast. To manage risk, a stop-loss order should be placed at $435.50, below the support price. The target price could be set at $450.50, aiming to capitalize on a potential upward movement towards the resistance level. This strategy capitalizes on the short-term volatility while mitigating potential losses. Based on the provided price history and forecast for stacks, a short-term investment strategy appears to be the most suitable approach. The historical price data reveals a recent downtrend, with prices fluctuating around the $1.50 mark. The forecast also suggests a continued downward trajectory, with prices potentially dropping below the current support level of $1.503. This bearish outlook indicates a higher probability of profit from a short position. Therefore, a short position on stacks is recommended for a short-term investment strategy. An entry price of $1.53 would allow for capturing potential downside momentum, while setting a stop loss at $1.56 mitigates risk. The target price should be set at $1.48, aligning with the predicted lower bound of the forecast, allowing for profit taking before the market potentially rebounds. This strategy capitalizes on the anticipated short-term decline in stacks prices, while managing risk through a well-defined stop loss. Given the price trends and forecast for Ethereum, a cautious investment strategy would focus on a short-term approach. The historical prices show a downward trend over the last 2 weeks, with the current price hovering near its forecast and below the resistance level. The forecast suggests Ethereum could drop further, reaching a low of $3,210. The support price is at $3,224.16, indicating a potential floor for the price. In this scenario, a short position is advisable to capitalize on the potential for a price decrease. An entry price of $3,300 would be suitable, aligning with the current price and the forecasted downward movement. The stop loss should be set at $3,380 to protect against any unexpected price recovery. The target price should be set at $3,180, slightly above the forecasted lowest price, allowing you to take profits before the market hits the support level. This strategy allows for potential profit from the anticipated price decline while minimizing risk through a well-defined stop loss. Given the price trends and forecast for Ripple, an aggressive investment strategy would focus on a short-term approach. The historical prices show a fluctuating trend, with the current price hovering near the support level of $2.3354. The forecast suggests Ripple could rise towards $2.69 in the coming weeks, with a resistance level at $2.5828. In this scenario, a long position is advisable to capitalize on the potential for a price increase towards the resistance level. A suitable entry price would be around $2.40, aligning with the current price and the support level. To manage risk, a stop-loss order should be placed at $2.35, slightly below the support price. This would limit potential losses if the price unexpectedly drops. The target price could be set at $2.60, allowing for a decent profit margin before reaching the resistance level. This strategy leverages the potential for short-term price appreciation in Ripple while employing risk management techniques to protect against potential downturns. Binance Coin shows a mixed price trend over the past 2 weeks, with fluctuations around the $700 mark. While the forecast suggests a slight downward movement in the coming week, the price remains relatively close to the support level of $685.69. Considering this, a short-term, neutral strategy seems appropriate. Given the current price range and the forecast, a long position with a conservative approach is recommended. An entry price around $695 would allow for potential upside if the price rebounds towards the recent highs near $729.76. A stop loss at $688 would limit potential losses if the price continues to decline. The target price could be set at $715, aiming to capture a moderate profit within the short term. This strategy allows for potential gains while managing risk by setting clear entry, stop loss, and target prices based on the available information. Given the price trends and forecast for Stellar, a medium-term investment strategy appears most suitable. While the historical prices show some volatility, the forecast indicates a gradual upward movement. The current price is hovering near the support level of $0.3919, suggesting a potential buying opportunity. Therefore, I recommend a long position on Stellar. An entry price of $0.415 aligns with the current price and the forecast's upward trajectory. To manage risk, set a stop loss at $0.392, below the support level. The target price should be $0.447, which aligns with the forecast's projected high point for the next week. This strategy capitalizes on the potential for Stellar to rise towards its resistance level while mitigating potential losses. Given the price trends and forecast for Toncoin, a cautious investment strategy would focus on a short-term approach. The historical prices show a downward trend over the past 2 weeks, with the forecast indicating further declines. The forecast suggests Toncoin could drop from its current price to as low as $5.18 in the coming week, while the support price sits at $5.208 and resistance at $5.818. This indicates a bearish outlook in the short term. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. An aggressive short-term investment strategy would involve an entry price of $5.38, aligning with the current price and the recent dip. The stop loss should be set at $5.45 to protect against any unexpected price recovery. The target price should be set at $5.15, slightly above the forecasted lowest price, allowing you to take profits before the market hits major support at $5.208. This strategy aims to capitalize on the potential for a short-term price decline while managing risk through a well-defined stop loss. Given the price trends and forecast for Cardano, a medium-term investment strategy seems most appropriate. While the historical price shows fluctuations, the forecast indicates a slight upward trajectory over the next week. The current price sits comfortably above the support level of $0.883, suggesting a solid base for potential growth. The resistance level of $1.0951 presents a potential ceiling for the near term. Therefore, a long position is recommended to capitalize on the anticipated price increase. A suitable entry price would be around 93 cents, slightly below the current price, allowing for some buffer against immediate volatility. The stop loss should be set at 89 cents, just below the support level, to minimize potential losses. The target price could be set at $1.05, aiming for a reasonable profit margin before encountering the resistance level. This strategy allows for a balanced approach, taking advantage of the bullish sentiment while managing risk effectively. Based on the provided price history and forecast for Litecoin, a cautious short-term investment strategy appears most suitable. The historical price data shows a recent upward trend followed by a slight dip. The forecast indicates a continued sideways movement with a slight downward bias. Given this, a short position could be considered to capitalize on the potential for a price decline towards the support level. An entry price around $102, aligning with the recent dip and the forecast, would be appropriate. The stop loss should be set slightly above the recent high of $105 to mitigate risk. The target price could be set around $99, aiming to capture a potential downside move towards the support level. This strategy prioritizes risk management by setting a stop loss and targets a modest profit, reflecting the cautious outlook for the short term. Based on the provided price data for Doge-Coin, a medium-term investment strategy appears most suitable. The historical prices demonstrate a fluctuating trend, but the forecast suggests a potential upward movement, with prices likely to hover around the $4.98 to $5.16 range. This indicates a period of consolidation and potential for growth. Therefore, a long position is recommended. An ideal entry price would be around $4.85, slightly below the current price, allowing for a margin of safety. The stop loss should be set at $4.73, the recent low point, to minimize potential losses. The target price could be set at $5.13, the recent high point, aiming to capture a significant portion of the potential upward movement. This strategy allows for a balance between risk and reward, capitalizing on the expected upward trend while mitigating potential downside risks. Given the price trends and forecast for Aptos, a cautious investment strategy would focus on a short-term approach. The historical prices show a slight downward trend over the last 2 weeks, with the current price hovering around the support level of $8.69. The forecast suggests a further decline in the coming week, indicating a bearish outlook in the short term. Therefore, a short position is advisable to capitalize on the anticipated price decrease. An entry price of $9.10 aligns with the current price and the predicted downward movement. The stop loss should be set at $9.20 to protect against any unexpected price rallies. The target price should be set at $8.60, slightly above the support level, allowing for potential profit before the market hits major support. Based on the provided price history and forecast for SE, a cautious investment strategy is recommended. The 2-week price change shows a downward trend, with the forecast indicating further declines. While the support price offers a potential floor, the resistance level suggests limited upside potential in the short term. This bearish outlook suggests a short position as the most suitable approach. To execute this strategy, an entry price of $0.390 would be appropriate, allowing you to enter the short position at a price slightly above the current market value but below the resistance level. A stop loss should be set at $0.410 to minimize potential losses if the price unexpectedly rises. The target price should be set at $0.360, aiming to capitalize on the anticipated price decline towards the support level. This strategy prioritizes risk management by setting a stop loss while targeting a reasonable profit based on the forecast. Based on the provided Ethereum Classic price history and forecast, a cautious short-term investment strategy appears most suitable. The historical data reveals a relatively stable price range, with recent fluctuations hovering around $25. The forecast suggests a slight dip in price over the coming week, potentially reaching as low as $24. Considering this outlook, a short position on Ethereum Classic could be considered. An entry price around $25.10 would allow for capturing potential downward movement. A stop-loss order placed at $25.50 would help mitigate risk in case of an unexpected price surge. The target price could be set at $24.50, aiming to capitalize on the forecasted price decline while leaving room for potential fluctuations. This strategy prioritizes risk management and seeks to profit from short-term price adjustments within the existing price range. Based on the provided price information for Polygon, a cautious investment strategy is recommended. The 2-week price history shows a volatile trend with both upward and downward movements. The forecast suggests a slight downward trend over the next week, indicating potential short-term weakness. Given this outlook, a short position is advisable. An entry price around 46 cents, slightly above the current price, would allow for some room for potential price fluctuations. The stop loss should be placed at 47 cents, above the recent resistance level, to limit potential losses. The target price could be set at 44 cents, aligning with the support level and the predicted downward movement. This strategy aims to capitalize on the potential short-term decline while managing risk effectively. Based on the provided price history and forecast for AEVO, a short-term bearish investment strategy appears most suitable. The historical price data shows a downward trend, with the recent price decline suggesting a potential continuation of this trend. The forecast further supports this outlook, predicting a further drop in price over the next week. The current price is relatively close to the resistance level, indicating a potential for a pullback or a continuation of the downward movement. Considering this bearish outlook, a short position on AEVO is recommended. An ideal entry price would be around $0.335, aligning with the recent price action and the forecast. To manage risk, a stop-loss order should be placed at $0.355, slightly above the current price, to limit potential losses if the price unexpectedly rebounds. A target price of $0.318, slightly below the predicted lowest price, provides a reasonable profit target while allowing for some room for price fluctuations. This short-term strategy aims to capitalize on the anticipated price decline in AEVO over the next week. Based on the provided price information for optimism, a cautious investment strategy with a medium-term perspective appears most suitable. The 2-week price history demonstrates some volatility, but the overall trend suggests a potential for consolidation rather than a strong upward or downward movement. The forecast prices indicate a slight decline over the next week, further supporting a cautious approach. Considering these factors, a long position might be considered, aiming to capitalize on any potential rebound in price. A suitable entry point could be around $1.78, slightly above the recent lows and below the immediate resistance level. A stop-loss order could be placed at $1.75 to limit potential losses if the price continues to decline. The target price could be set around $1.85, aiming to capture a modest profit if the price rebounds towards the resistance level. This strategy balances risk and potential reward, allowing for potential gains while mitigating the downside risks associated with the current market outlook. Given the price trends and forecast for STRK, a cautious investment strategy would focus on a short-term approach. The historical prices show a downward trend, with the forecast indicating further declines. The forecast suggests STRK could drop from its current price to as low as $0.414 in the next week, while the support price sits at $0.3667 and resistance at $0.5073. This indicates a bearish outlook in the short term. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. For an aggressive short-term investment strategy, an entry price of $0.465 would be ideal, aligning with the current price and allowing for some room for price fluctuation before entering the short position. The stop loss should be set at $0.475 to protect against any unexpected price recovery. The target price should be set at $0.410, slightly above the forecasted lowest price, allowing you to take profits before the market hits major support at $0.3667. Given the price trends and forecast for Solana, a cautious investment strategy would focus on a medium-term approach. The historical prices show some volatility, with a recent dip but also signs of potential recovery. The forecast suggests a slight decline in the coming week, hovering around the support price. Therefore, a long position is advisable for a medium-term investment strategy. An entry price of $188 could be considered, aligning with the current price and the support level. A stop loss at $185, slightly below the support price, would protect against further downside. The target price could be set at $210, aiming to capture potential upside towards the resistance level. This strategy allows for a balanced approach, capitalizing on potential recovery while mitigating risk. Based on the provided price history and forecast for Jupiter, a short-term bearish strategy appears most suitable. The historical price data shows a fluctuating pattern with a recent downward trend. The forecast further reinforces this bearish outlook, projecting a decline in price over the coming week. The price is currently hovering near the support level of $0.7942, indicating potential for further downward movement. Therefore, I recommend opening a short position on Jupiter. An ideal entry price would be $0.816, aligning with the current price and the recent peak. To manage risk, a stop-loss order should be placed at $0.853, slightly above the recent high and the resistance level. This would limit potential losses if the price unexpectedly rebounds. The target price for this short position should be set at $0.781, aiming to capitalize on the anticipated price decline and aligning with the lowest forecast price. Given the price trends and forecast for render, a moderately aggressive investment strategy would focus on a short to medium-term approach. The historical prices show a slight downward trend over the past 2 weeks, with the current price hovering near its support level of $6.802. While the forecast indicates a potential for slight recovery in the coming week, the overall trend suggests limited upside momentum. Therefore, a short position is advisable to capitalize on the anticipated price decline. An entry price of $7.15 would allow you to enter the market before the potential dip, with a stop-loss set at $7.36 to limit potential losses if the price unexpectedly surges. The target price should be set at $6.85, slightly above the support level, allowing you to take profits before the market potentially finds a floor. This strategy balances risk and reward, aiming to capitalize on the downward trend while mitigating potential losses. Based on the provided Solana name service price information, a cautious investment strategy is recommended. The 2-week price history shows a fluctuating trend, with recent prices dipping below the historical average. The 1-week forecast indicates a further decline, with prices potentially reaching as low as $0.205. This suggests a bearish outlook in the short term. Therefore, a short position on Solana name service is advised. An entry price around $0.220, slightly above the current price, allows for a buffer against immediate price fluctuations. A stop-loss should be placed at $0.228 to limit potential losses if the price unexpectedly rises. The target price can be set at $0.200, aiming to capitalize on the anticipated price decline. This strategy prioritizes risk management by setting a stop-loss and focuses on a short-term profit opportunity based on the bearish forecast. Based on the provided data for Doge-Coin, a medium-term investment strategy appears most suitable. The historical price data demonstrates a fluctuating trend with recent price corrections. While the forecast suggests a slight upward movement, the price remains relatively close to its support level. This indicates potential for a consolidation phase before a more significant price action. Therefore, I recommend a long position with an entry price around $0.330. This price point allows for a reasonable margin above the current price and below the recent resistance. A stop-loss should be placed at $0.320 to minimize potential losses in case of a downward price movement. The target price can be set at $0.350, aiming to capture a potential upside move towards the resistance level. This strategy allows for a balanced approach, capitalizing on potential upward momentum while mitigating risks associated with volatility. Based on the provided PEPE price information, a cautious investment strategy focusing on the short term appears most suitable. The historical price data reveals a volatile trend with recent fluctuations below the resistance price of $0.0000193. While the forecast suggests a slight upward movement, it remains within a narrow range, indicating limited potential for significant gains. Therefore, a short-term long position could be considered, aiming to capitalize on a potential price increase towards the resistance level. A conservative entry price of $0.0000184, aligning with the current price, would be advisable. The stop-loss should be set at $0.0000179 to minimize potential losses if the price drops. The target price could be set at $0.0000193, aiming for a modest profit before encountering the resistance level. This strategy allows for participation in potential upward movement while mitigating risk through a well-defined stop-loss order. $1. Given the price trends and forecast for SHIB, a short-term investment strategy appears most suitable. The historical prices show a slight downward trend, and the forecast suggests a continuation of this trend. Although the support price is relatively close, the resistance price is significantly higher, indicating a limited upside potential in the short term. $2. Therefore, a short position is recommended to capitalize on the potential price decline. A suitable entry price would be around $0.0000222, aligning with the recent price action and the forecast. The stop loss should be set at $0.0000229 to limit potential losses if the price unexpectedly rebounds. The target price could be set at $0.0000211, aiming to capture a portion of the anticipated price decline while staying below the support level. This strategy focuses on exploiting the short-term downward momentum in SHIB. Given the historical price data and the one-week forecast for Doge-Coin, a short-term bearish strategy appears to be the most suitable approach. The price has been steadily declining over the past 2 weeks, and the forecast predicts further downward movement. The support price sits at $1.394, while the resistance is at $1.818. This suggests that the price is unlikely to break through the resistance in the short term, and a short position could potentially capitalize on the downward trend. Therefore, an aggressive short-term investment strategy for Doge-Coin would involve entering a short position at the current market price, which is slightly above the support level. The stop loss should be set at $1.41 to protect against any unexpected upward movement. The target price could be set at $1.39, aligning with the support level, allowing for a quick profit if the forecast holds true. Based on the provided price information for Doge-Coin, a short-term bearish strategy appears to be the most suitable approach. The recent price history shows a slight downward trend, with the forecast predicting further declines over the coming week. Although the support price sits at $0.006215, the forecast suggests the price could drop below this level, indicating a potential for short-term profit. Therefore, an investment strategy would involve taking a short position on Doge-Coin. A conservative entry price could be set at $0.00649, aligning with the current price near the resistance level. The stop loss should be placed at $0.0066, slightly above the entry price, to minimize potential losses. The target price could be set at $0.0060, capitalizing on the forecasted price decline and aiming for a reasonable profit margin. This short-term strategy leverages the predicted downward momentum of Doge-Coin while managing risk through a well-defined stop loss. Based on the provided near-protocol price information, a cautious short-term investment strategy is recommended. The 2-week price history demonstrates a fluctuating trend, with recent dips suggesting a potential bearish momentum. The forecast also indicates a downward trajectory for the coming week, with prices projected to hover around the support level. Considering these factors, a short position seems more suitable for capitalizing on the anticipated decline. An entry price of $5.05 could be considered, aligning with the resistance level and providing a margin for potential price fluctuation. Setting a stop loss at $5.15 would help mitigate risks if the price unexpectedly surges. The target price should be set at $4.76, the support level, allowing for potential profit before the price potentially finds significant support. This strategy prioritizes risk management while aiming to capitalize on the short-term bearish outlook for near protocol. Given the price trends and forecast for Internet Computer, a neutral investment strategy would focus on a short-term approach, aiming to capitalize on potential price fluctuations within the near future. The historical prices show a slight downward trend, but the forecast suggests a period of consolidation around the $10 mark. The support price at $9.903 indicates a potential floor for the price, while the resistance at $10.684 suggests an upper limit for short-term gains. Therefore, a strategy involving a long position with a cautious approach would be suitable. An entry price around $9.95 would allow you to buy near the support level, while a stop loss at $9.85 would protect against significant downside movements. The target price could be set at $10.30, aiming to capture a potential upward movement towards the resistance level. This strategy allows for potential profit while managing risk within a short time frame. The historical price data for Injective reveals a volatile price trend over the past 2 weeks, with fluctuations ranging from $19 to $25. The forecast suggests a slight downward movement in the coming week, settling around $20. Considering this, a short-term investment strategy with a short position seems appropriate. The entry price should be set at $21, aligning with the current price and the potential for a decline. To manage risk, the stop loss should be placed at $21.50, slightly above the entry price, allowing for a small margin of error. The target price should be set at $19.69, the support price, aiming to capture potential downside movement. This strategy capitalizes on the anticipated downward trend while minimizing potential losses. Based on the provided historical price data and forecast for BTC, a short-term investment strategy appears to be the most suitable approach. The 2-week price change shows a downward trend, with the forecast indicating further declines. The historical prices also suggest a period of consolidation before a potential downward move. Therefore, an aggressive short-term investment strategy would involve taking a short position at the entry price of $445, aligning with the current price and the forecast. The stop loss should be set at $454 to protect against any unexpected upward movement. The target price should be set at $434, slightly above the support price, allowing for potential profit before the market hits major support. Based on the provided historical price data and forecast for THETA network, a short-term bearish strategy appears most suitable. The price has shown a consistent downward trend over the past 2 weeks, and the forecast predicts further declines in the coming week. The current price is relatively close to the support price of $1.959, suggesting that the price may find some temporary support at this level. However, the resistance price of $2.287 is quite distant, indicating that a significant upward move is unlikely in the short term. Therefore, an aggressive short-term investment strategy would involve opening a short position at the current market price, which is slightly above the support level. A stop-loss order should be placed above the current price to limit potential losses if the price unexpectedly rises. The target price should be set slightly below the support level, aiming to capitalize on the anticipated price decline. This strategy leverages the bearish momentum and aims to profit from the potential drop in price towards the support level. Based on the provided price information for WorldCoin, a cautious investment strategy with a short-term perspective is recommended. The 2-week price history reveals a fluctuating trend, with recent price dips suggesting a potential for further decline. The forecast also indicates a downward movement in the coming week, further supporting a bearish outlook. Considering the support price at $2.129 and the resistance at $2.328, entering a short position appears to be a more suitable approach. To execute this strategy, an entry price of $2.20 would be appropriate, allowing for some room to capture potential downward movement. The stop loss should be set at $2.25 to limit potential losses if the price unexpectedly rises. The target price could be set at $2.05, aiming to capitalize on the forecasted decline while staying mindful of potential support levels. This strategy allows for a measured approach to potential gains while mitigating risk in a volatile market. Based on the provided price history and forecast for Hooked Protocol, a cautious short-term investment strategy is recommended. The historical prices show a downward trend, and the forecast predicts further declines. Although the support price is at $0.3326, which could potentially act as a floor, the resistance level at $0.3798 suggests limited upside potential. Given this bearish outlook, a short position is advisable to capitalize on the anticipated price decline. An entry price of $0.371, slightly above the current price and the lowest point in the forecast, allows for a small margin of safety. The stop loss should be set at $0.3798, the resistance level, to limit potential losses if the price unexpectedly moves higher. The target price should be set at $0.3326, aligning with the support price and providing a realistic profit target. This strategy aims to capitalize on the short-term downward momentum while managing risk effectively. Based on the provided data for Artificial Superintelligence Alliance, a short-term investment strategy appears to be the most suitable approach. The 2-week price history shows a fluctuating pattern with an overall upward trend. However, the 1-week forecast suggests a slight decline in prices, indicating a potential pullback. Considering the support price at $1.234 and the resistance price at $1.362, entering a short position near the current price of $1.33 could be beneficial. For this strategy, an entry price of $1.33 would be appropriate. A stop loss could be set at $1.362, just above the resistance level, to limit potential losses. The target price would be $1.234, aligning with the support level, aiming to capture potential price decline. This short-term strategy allows for capitalizing on the anticipated price correction while mitigating risk through a well-defined stop loss. Given the historical price fluctuations and the 1-week price forecast for Polkadot, a conservative short-term investment strategy appears most suitable. The historical price data shows a recent downward trend, and the forecast indicates further declines. While the price is currently hovering near the support level of $6.587, the potential for a continued downward movement towards the forecasted lows makes a short position a more attractive option. To implement this strategy, consider entering a short position at the current market price around $6.68. Set a stop-loss order at $6.74 to limit potential losses if the price unexpectedly surges. A conservative target price could be set at $6.50, aiming to capitalize on the anticipated price decline while allowing for some margin of safety. This approach allows for potential profit from the short-term price movement while mitigating risk with a well-defined stop-loss order. Based on the provided price information for Filecoin, a cautious medium-term investment strategy appears most suitable. The historical price data reveals a fluctuating trend with recent dips and rises. While the forecast suggests a slight downward movement in the coming week, it's crucial to consider the support price at $4.917, which acts as a potential floor for the price. Therefore, a long position is recommended with an entry price around $5.05, aligning with the current price and providing a buffer against immediate downward pressure. The stop loss should be set at $4.92 to limit potential losses if the price drops below the support level. The target price can be set at $5.22, aiming to capitalize on the potential for a price rebound towards the resistance level. This approach balances risk and reward, allowing for potential profit while mitigating the downside risk associated with short-term market volatility. Based on the historical price information and the provided forecast for Conflux, a short-term bearish strategy appears to be the most suitable approach. The historical price data reveals a downward trend, with the recent price hovering near the support price of $0.126. The forecast suggests a further decline in price, with the lowest projected price being $0.138. Therefore, an investment strategy involving a short position on Conflux is recommended. An entry price of $0.149, slightly above the current price, would allow for a potential profit margin. The stop loss should be set at $0.1562, the resistance price, to limit potential losses if the price unexpectedly rebounds. The target price should be set at $0.126, the support price, to maximize profits from the anticipated downward movement. This short-term strategy capitalizes on the bearish sentiment indicated by the price data and forecast. Based on the provided information for Ethereum name service, a cautious short-term investment strategy appears most suitable. The 2-week price history exhibits a general downward trend, with the forecast suggesting further decline. Although the support price is relatively far away at $17.32, the resistance level at $34.76 is a significant barrier to upward movement. Therefore, a short position is recommended. An entry price around $32, near the current price and the predicted low point, would be prudent. The stop loss should be set at $33, slightly above the entry price, to minimize potential losses if the price unexpectedly rises. The target price could be set at $31, anticipating a moderate decline based on the forecast. This strategy aims to capitalize on the potential short-term price weakness while managing risk through a defined stop loss. Given the price trends and forecast for Avalanche, a medium-term investment strategy focusing on a long position appears suitable. The historical prices demonstrate a recent upward trajectory, with the current price hovering near the support level of $36.33. While the forecast suggests a slight decline in the short term, the long-term potential for Avalanche remains positive. Therefore, an entry price of $36.50 would allow you to buy in at a relatively attractive level. The stop loss should be set at $36 to protect against a significant price drop, while the target price can be set at $40, aiming to capture potential upside gains as Avalanche moves towards the resistance level of $41.24. This strategy balances risk and reward, capitalizing on the medium-term bullish outlook for Avalanche. Doge-Coin shows a recent downward trend, with the forecast indicating further declines. This suggests a bearish outlook in the short term. Given the current price hovering around the support price of $0.04446, a short position would be more suitable to capitalize on the anticipated decline. A conservative entry price of $0.0453, slightly above the current price, allows for potential price fluctuations before entering the short position. The stop loss should be set at $0.04687, the resistance price, to protect against any unexpected price surges. The target price could be set at $0.04446, aligning with the support price, aiming to lock in profits before the market potentially rebounds. This strategy prioritizes risk management by setting a stop-loss order to limit potential losses. The target price is set conservatively, aiming for a moderate profit while minimizing the risk of holding the position for too long. Based on the provided price information for PENDLE, a cautious investment strategy is recommended. The 2-week price change shows a downward trend, with the forecast indicating further declines. Although the support price is at $3.923, the forecast suggests PENDLE could drop to as low as $3.83. This bearish outlook in the short term makes a short position the most suitable strategy to capitalize on the anticipated decline in prices. Therefore, an aggressive short-term investment strategy would involve entering a short position at $4.27, the current price. The stop loss should be set at $4.739, the resistance price, to protect against any unexpected price recovery. The target price should be set at $3.923, aligning with the support price, allowing you to take profits before the market hits major support. Based on the provided The Sandbox data, a short-term investment strategy appears most suitable. The price history demonstrates some volatility, but the recent forecast suggests a slight downward trend. This suggests a potential opportunity to capitalize on a short-term price dip. An aggressive strategy would involve entering a short position at the current price of around 58 cents, with a stop loss set slightly above the recent high at $0.604. This limits potential losses while allowing for a decent profit margin. The target price would be set at $0.5742, the support price, aiming to capture a portion of the predicted downward movement. This strategy leverages the short-term bearish outlook indicated by the forecast while managing risk through a defined stop loss. Based on the provided Decentraland price history and forecast, a short-term investment strategy appears most suitable. The historical price data shows fluctuations, but generally trends upwards. However, the forecast indicates a downward trajectory over the next week. This suggests a potential short-term correction in the price of Decentraland. Therefore, an aggressive short-term investment strategy would involve taking a short position on Decentraland. An entry price of $0.498 could be considered, aligning with the current price and the downward trend suggested by the forecast. A stop loss at $0.514, slightly above the recent resistance price, would help mitigate potential losses if the price unexpectedly rises. The target price could be set at $0.467, the support price, aiming to capitalize on the anticipated price decline. This strategy aims to profit from the short-term correction in Decentraland's price. Based on the provided price history and forecast for ENG coin, a cautious short-term investment strategy appears most suitable. The recent price trend shows some volatility, but the forecast suggests a potential decline in the coming week. The current price is hovering near the resistance level of $0.209, indicating a potential for a pullback. Therefore, an investment strategy would involve taking a short position on ENG coin. A conservative entry price could be around $0.206, allowing for a small buffer above the current price. The stop loss should be set at $0.212 to limit potential losses if the price unexpectedly rises. The target price could be set at $0.195, aligning with the forecast's lower end and providing a reasonable profit margin. This strategy aims to capitalize on the potential short-term decline in ENG coin while managing risk through a well-defined stop loss. Based on the provided price history and forecast for Uniswap, a short-term investment strategy appears most suitable. The historical prices show a slight downward trend, while the forecast suggests a continuation of this trend. The current price is close to the support price of $13.564, indicating potential for further decline. Given this outlook, a short position is recommended. An aggressive short-term strategy would involve entering a short position at $14, the current price, with a stop loss at $14.50 to limit potential losses if the price unexpectedly rises. The target price should be set at $12.50, aiming to capitalize on the anticipated price decline. This strategy leverages the short-term bearish outlook and aims to profit from the potential downward movement of Uniswap. Given the price trends and forecast for Chainlink, a cautious investment strategy would focus on a short-term approach. The historical prices show a slight downward trend, with the current price hovering near the support level of $19.74. The forecast indicates a further decline in the coming week, suggesting a bearish outlook in the short term. Therefore, a short position is advisable to capitalize on the potential for a price decrease. An entry price of $20 would be ideal, aligning with the current price and the forecast. The stop loss should be set at $20.50 to protect against any unexpected price recovery. The target price should be set at $19.50, slightly above the support level, allowing you to take profits before the market hits major support. Based on the provided information for Aave, a cautious investment strategy with a medium-term perspective appears most suitable. The 2-week price change showcases a downtrend, and the forecast predicts further declines in the coming week. While the support price at $282.81 suggests a potential floor, the resistance at $319.92 indicates significant hurdles for an upward price movement. Considering this outlook, a short position with a conservative approach is recommended. An entry price around $295, close to the current price and the forecasted low, would allow for potential profit as the price moves towards the support level. The stop loss should be set slightly above the entry price at $300 to minimize risk from potential short-term rebounds. The target price could be set at $285, aiming for a modest profit while staying vigilant of the potential for further declines. This strategy aims to capitalize on the prevailing bearish sentiment while managing risk through a well-defined stop loss and a realistic profit target. Given the recent price history and forecast for EOS, a short-term investment strategy appears most suitable. The historical data shows some volatility, but the overall trend has been downward in recent weeks. The forecast also suggests a continued decline in price over the next week. Therefore, an investment strategy involving a short position on EOS is recommended. A conservative entry price could be around $0.795, slightly above the current price and the forecasted lowest point. A stop-loss order should be placed at $0.804, slightly above the entry price, to limit potential losses. The target price could be set at $0.767, aligning with the lowest forecasted price, allowing for a reasonable profit margin. This strategy capitalizes on the anticipated price decline while managing risk through a well-defined stop-loss order. Given the provided price data for Tron, a cautious investment strategy is recommended. The historical prices demonstrate a volatile trend with recent declines, and the forecast suggests further downward movement. Although the support price at $0.2071 provides a potential floor, the resistance at $0.2444 indicates limited upside potential in the near term. Therefore, a short-term short position is advisable. An entry price around $0.241, close to the current price and slightly above the support level, allows for capturing potential downward momentum. The stop loss should be placed at $0.2444, the resistance level, to limit potential losses if the price unexpectedly rises. The target price should be set at $0.2071, the support level, aiming to profit from the anticipated decline. This strategy prioritizes risk management and capital preservation while capitalizing on the perceived bearish sentiment in the short term. The price history of Suncoin shows a fluctuating trend over the past 2 weeks, with a slight downward movement. The forecast predicts a continued decline in price over the next week. Considering the current price, support level, and resistance level, a short-term bearish outlook appears more likely. Therefore, an investment strategy for Suncoin should focus on a short position. A suitable entry price would be around $0.0245, slightly above the current price, but below the resistance level. A stop-loss order should be placed at $0.0258, slightly above the entry price, to minimize potential losses. The target price could be set at $0.0226, aligning with the forecast price and offering a reasonable profit margin. This strategy capitalizes on the anticipated price decline while managing risk effectively.